Hi and welcome to the Market Alert for Monday the 13th of December 2021. So Friday was the inflation numbers. They came out higher than forecast just by 1%. Prices climbed at the fastest pace since 1982. But as they always say when they want to move the stock market to the upside, it could have been worse. And also to suppress the price of the metals. 2 yields dropped on the CPI print as it missed the 7% whisper level. And also, this is very interesting as well, this came out on late Friday night. And just like that, inflation is about to disappear. Starting in January 2022, weights for consumer price index will be calculated based on consumer expenditure data from 2019 to 2020. You can't make this crap up, can you? I mean, it's unbelievable. So, I hate to tell you this, but from January, we're going to see the metals hammered because they're going to find a new way of calculating the inflation. And that's the same in the UK. I don't know if it's still the case, but the last time I looked, we got disposable cameras in there and lip gloss just to try and suppress the price of inflation. It's just what they do, I'm afraid. Nothing but blatant manipulation. So there's Friday's result. And let's have a look, see what we've got in store this week. I think it's in FOMC this week, isn't it? Before we get into the Christmas run. Let's see if we can have a look through. We've got nothing today anyway. There's no news today. Let's have a look. Yes, FOMC on Wednesday. That's the big one for the week. And then we've got the flash data on Thursday as well. There's a lot of news out this week. We'll go through it as the days turn up. Certainly a lot on Thursday, whole stack of data. But today, there isn't a single thing today, so we'll see what the market does. It can react by itself, of course, today because there's nothing to stop it from moving higher. There is no news. So if we look at Friday, the Dow managing to move higher as the data was actually quite negative for the stock market, but that didn't matter. As it said in the headline, it could have been worse. So they've moved the market back to the upside, and we've got a lovely V-shaped correction going on at the moment in the stock market. This has been the pattern for the stock markets for a very long time. So we can disband with the fibs to the downside. We've also managed to get through here on Friday. You can see the market closing above the confluence of fibs. So that's all taken care of. And now on the upside, from here down to here, we've just gone through 89, so we might as well dispatch these as well. Let me just delete this, and then up in here from this high down to this low, you can see that we've got the 78% there. So again, let me just remove these. So this is the area with through 78, and this is where there could be some resistance during today's session. So keep an eye on this one if you trade the Dow. In the 30-minute chart, for Friday, you can see the market's just moved up sharply. We had an initial sell-off here. This was at just 4:30 in the afternoon. You can see this, and then they bought into the market, and then they brought the prices all the way back thanks to the inflation figures and also the assistance of the plunge protection team, no doubt as well. But at the moment you can see prices are sideways to higher in the Dow there. So let's have a look at the DAX. Also this moving to the upside, but not as strongly as you can see, nowhere near the highs that we saw from last week as the market made its recovery. Early part of the week, need to get back above the 62% retracement and this high if prices are to move higher. So again, a bit of a struggle there for the DAX at the moment. Just seeing, I'll keep the fibs to the downside in here at the moment because the market's struggling a bit. It's also struggling with the 20-bar moving average as well. We can break through here and here, then obviously we've got this upside targets here as well. In the 30-minute chart of the DAX, I'll just find it. So you can see this is Friday's action, the market moving up, and then of course we had the news of the CPI numbers, and then the market managing to also follow the Dow and move to the upside, taking out Friday's high at the moment on the overnight market there. And in the 2-minute charts, which I've got a separate chart, I had a request to look at the old signals as well, so I'm more than happy to do that. I just got sidetracked with working on the new stuff and just getting the market alert out there, but certainly more than happy. So on Friday morning, we see the market moving higher, trading up to the 200 MA before being hit to the downside. We then had a sell signal. This moved lower, but as you'll see here, as it got filled, we had the BRN in the way here, and also you will notice from here up to here, this is another reason why it stopped. It was right on the 78%, and this is how I've developed the new stuff, because when we're having losing signals in the original strategy, I couldn't understand why the market wouldn't continue, and then discovered that there was certain areas where the market would find support, and that's, as I say, why I'm actually putting these new signals in. But in the old system, we can see there that the market stops, see an increase in volume, and then we get a reversal to move to the upside. So we'll just mark this up, and you'll see the market took out the short side. Whoops, just move that back. Took out the short side and then moved to fill on the long side there. So the market on that one, there was a 15-point loss on the short side, and then the market moving to the upside, and eventually, as you can see, they're closing back below the 5-bar moving average. It took a moment or two to get through the scalp, as well as the prices traded sideways, but we didn't close below the 5-bar moving average, and this is the first time it closes. However, at this point, you'll see the market sitting on the 200 MA before it then went up to the BRN and then closed back here. So depending on where you felt comfortable on this one, there were two situations where the trailing 5-bar moving average actually came back to. The difference in the actual trades, I'll just show you this as well. So from the entry price to here, where the market comes back through the 5-bar moving average, is 17 points. And then on the second one, where the market came back through the BRN, we know we're going to have issues around this area, is 27 points potential on this trade. So then the market, of course, was waiting for the non-farm payroll, the CPI numbers. If we just go through this, you'll see the market's reaction at 1:30, which is there. Market moving higher, pulling back, and then we kicked off in the afternoon, and the market didn't want to carry on to the upside. Got within a smidgen of the scalp, but then closed back below the 5-bar moving average, and then moved south. And as it came back, of course, took out the profit from the original trade, but then there was the 15-point loss as well. So despite the fact the market moving down, it's a shame here because we didn't quite close below the 20-bar moving average. Had we have done so there on this bar, we would have had a sell signal there, and the market obviously moving lower. So a bit frustration because we've got the market stuck at the high to the left there. And again, this is the reason why I've been spending a lot of time working on revamping the actual signals to include a lot of what I've shown you before in the last few weeks. So let's have a look overnight and show you where prices are. They gapped higher and the market came down and more or less filled it, and then it's just traded sideways to higher and drifted a bit lower. But as we're heading towards the futures opening for a Monday morning, we're currently trading just above the high, back above the 200 MA, and sitting there at the moment. So we'll wait and see what happens at 7 a.m. with regards to the futures market when it opens. And meanwhile, in silver, you can, and the metals, you can see here that we've got silver moving higher on. Let's just have a look here on Friday, managing to come back. Let me just make sure this is right. It doesn't look right somehow. Oh, it is. Yeah, it is right. So Friday we saw silver coming back. We've got divergence in the stochastics. They're starting to move higher, and the market is also finding support there. You see this with the green. That's what these green blocks are. So price is trying to attempt to move higher. I mean, it's an appalling reaction, frankly, given the fact that the inflation rate came out greater than forecast. But then again, that's the manipulation of the market, isn't it? In the 30-minute chart on Friday, you can see the market moving higher, but it's no great big move whatsoever, because if I just narrow the chart, you'll see that between here and here is 50 cents, and the market, let's just have a quick calculation just to see how much it actually moved when the news came out. 41 cents. So, oh yeah, I suppose not so bad then, because we're actually 10 cents below there, aren't we? So according to the numbers up here, we moved up 41 cents in silver during Friday. It's drifted sideways to higher and is currently a bit like the 2-minute DAX at the moment, is sitting above Friday's high, just trading sideways. Not optimistic about this. I think you'll find that the price will be slammed at the LBMA fix at 1 p.m. That's the London fix. Gold still stuck in a sideways range as well, and yet had the opportunity to be moved to the upside on Friday and wasn't. So you can see just trading in a range there. Let's just have a look at the fibs. I'm about to redo this chart this morning. The December dollar index has gone off the board, but they haven't added the March one yet, so hopefully it'll be back tomorrow. So you can see price is sitting at the 62% retracement for Friday, or in between 62 and 78, and being brought back. At the moment we've got resistance on the upside, so from there down to there, you'll see in the sideways range we've got resistance at the 78% retracement as well. So that's all the inflation out of the way. We're now back to interest rates, which we'll hear about on Wednesday evening from Powell. Don't hold your breath. Nothing's going to change on that. Certainly not before Christmas, and probably not before June of next year, if ever they can manage to actually move them to the upside. But that's what the market's going to be looking for this week, what Powell's got to say with regards to interest rates, and also no doubt he'll say something about inflation as well. Okay, that's it for this one. If there is anything else to report, I'll let you know. But as ever, thanks for watching. See you in the next one.